This is Satya Pradipin of Cirrus Research. The latest dividend strategy issue is out. The title, Bottoming Profits to Fuel a Dividend Yield over a Dividend Growth Strategy. At the heart of this is this idea that the profit cycle is bottoming. The credit markets appear to be very easy, and potentially we even have a dovish Fed. You combine those things, and what you start to see is a more cyclical rotation. Our research has shown that in a more valuation-sensitive marketplace, dividend yield strategies will outperform dividend growth because they're directly linked to the growth versus value trade-off. So the drivers of our style oscillator basically is an overweight right now to value. A lot of that's driven by the fact that the profit cycle is bottoming, recovering, and the credit markets are fairly stable. So what we've started to see is that in reality, the yield strategies in the last few months have started to outperform, which is coincident to how dividend yield versus growth factors are performing. So we expect this to continue if the outlook on the economy is stable to positive. Importantly, a follow-through on this is the yield curve. Lots of talk about an inverted yield curve. The reality, though, is that as the yield curve starts to stabilize, because the outlook for growth is more positive, this sort of stabilizing yield curve will also support a dividend yield strategy. And then finally, there is a lot of talk about Japan and its performance dominance that we've seen. What is interesting is that the Japanese dividend yield, the dividend growth strategy, has far surpassed most of the other markets. In terms of what's underneath there, it looks as if what we're seeing is a good amount of the consumer discretionary exposures, for industrials, transports, some materials, as well as financials. So it is fairly dispersed, whereas in certain markets it could end up being just basically utilities and financials. So we think this is also interesting when looking overseas, notably in Japan. Take a look at the report, and as always, happy to take your questions. Thank you.